Well, good afternoon and welcome to Midcap Radar. When you're looking at the markets, not a very pretty picture. I'm Vivek Iyer and with me today is Hormaz Fatakia standing by the wall. Well, when you're talking about the markets, have a look at the Nifty. Just a couple of hours back, the Nifty in fact was flirting with the green territory. However, post 11 a.m., you've seen a very sharp sell-off. Markets now trading near the day's lowest point. The mid-cap and small-cap indices are bearing the brunt of the selling pressure. The mid-cap index now down close to 1.5%. But we have quite a lot lined up on the show for you. Let's start off with the top headlines. Market extends losses with key indices now at the day's low. Metal and oil and gas eke out gains. It sees deep cuts. Mid-caps underperform.
MTR Tech gains after bagging orders worth 226 crore in the clean energy and aerospace segment. Stock is one of the few bucking the trend, up nearly 8%.
Oil marketing companies in focus as sources suggest that the oil ministry is seeking a higher compensation of over 25,000 crore rupees for LPG under recoveries.
BASF is another one bucking the trend after gaining over 4% after the board gives an in-principle nod for the demerger of its agri-solutions business into a separate listed entity.
Well, those were the top headlines this particular afternoon. Like we mentioned, it's the selling pressure that the markets are seeing, and the sell-off, in fact, has intensified in the last hour of trade. Well, today is an important day when you're even looking at it from the passive indices point of view. Remember, come Monday, you will see a new look Sensex. JSW Steel will be entering the Sensex at Zomato would be entering the Sensex at the expense of JSW Steel, and the adjustments from passive indices will happen in trade today. The back of that, both of these stocks continue to remain in focus. Not only that, you will also be seeing the FTSE changes that will happen in trade today. But Hormaz is standing by the wall today, and he'll be joining me later near me as well. Hormaz, which are the top movers as far as the broader end of the markets are concerned?
Not a very pretty picture if you can look at the screen. It wasn't that bad until the last hour or so, but then since then it's been a very sharp sell-off, particularly in the broader markets and the benchmark indices as well. The mid-cap index now down to the lowest point of the day, and it is IT that is leading both the Nifty and the broader markets down. Mid-cap IT is no stranger to the sell-off. Look at this. All of these stocks are at the lowest point of the day. LTI Mindtree is now set for its worst week of 2024. It's down 11.5% this week, was down 5.5% yesterday, another 5.5% today, and most of the others, Persistent Systems and Coforge, ended at record highs yesterday and are seeing some bit of profit booking. Real estate is one of the other worst sectoral performers in today's trading session, and most of these stocks as well on the real estate index. But they are also seeing some bit of profit booking. As you can see, all of them are down to the lowest point of the day, anywhere losses between 3 to 4%. Some capital market linked names, they have run up significantly in 2024. Most of them have doubled or even tripled in value, and these are the ones that are seeing some profit booking today. Angel One, BSC, CDSL, all of them at the lowest point of the day, losses of anywhere between 3 to 4%. But some stocks that are bucking the trend and are doing well on the back of strong volumes, and Aegis Logistics is one of them, 7.5% higher. BASF we just highlighted, and Newgen Software, another record high in today's trading session, almost 5% higher in today's trade. And lastly, one of the stocks, some of the other stocks that are not doing very well in today's session, Siemens, we'll get to this in just a bit. A very, very sharp knock after a management commentary during the earnings call. RBL Bank is out of the FNO ban today, and it's seeing a knock of 6%. And Masgaon Dock is going to trade X stock split next week, seeing some bit of profit booking in today's trading session.
Thank you so much for that, Hormaz. You cannot take away from the fact that the entire capital goods space, after the commentary that's coming from Siemens, has taken a knock. Look at names like Siemens, look at ABB India, look at L&T. All of these names are taking quite a bit of a knock. But this is as good a time as any to welcome Hemen Kapadia from KR Choksey, FinServ, for a technical check on the market. Good afternoon, Hemen. How are you doing? And first up, looking at the markets, where do you see the next support level as far as the Nifty is concerned?
A very good afternoon to you, Vivek. Thank you for having me on the show. Always a pleasure. Frankly speaking, Vivek, I think we need to get an extended Christmas vacation. That's the only way we can escape this turmoil. But in terms of supports, Vivek, we've broken market hasn't closed today, but 23,894 was important support, and we're probably flirting with that today. If we close above that, I think That would be a minor positive. Supports below that coming at 23,667 and 23,400. So the sequence of lower top, lower bottoms continues. A bearish gap which formed yesterday hasn't been covered up, which is a negative. I believe it could get covered up next week. It's a holiday-filled week. So nothing much to look for, better to be stock specific. But yeah, I think it's too late to short and too early to buy. So I would say sit this one out, wait for stability to come in. Vivek.
Hey man, good afternoon. Thank you for joining in. If you want to be stock specific, which are those specific stocks then?
Almost, it's a loaded question. I would rather not answer that, but since I'm on the show, I don't have a choice. But yeah, seriously speaking, Apollo Hospitals is looking interesting. Almost high tops, high bottoms. The stock is above the 55-day exponential moving average. The daily mechanical indicators are given a crossover buy. Even the weekly indicators are giving a crossover buy. So stock seems set. It's a rare blooming, rose in a morose market. So a buy on Apollo Hospitals at around 7320, almost stop loss 7260, target of 7440. Second one is a sell call on HCL Tech. Stock is overbought. There's negative divergence. Crossover sell by the mechanical indicators right now on the daily chart, which might just get converted to weakness on the weekly chart. But as of now, it's a short-term sell call, Hormuz. At 1910, stop loss of 1950, target of 1830, sell call on HCL Tech Hormuz.
Thank you so much for that, Heyman. So Apollo Hospital is one name that you like, and HCL Tech is one that at this point of time you see further pressure in. Thank you so much for joining us and wish you a very happy weekend. Well, now let's introduce Growth Code, a special initiative by Grow and CNBC-TV18 with the aim of empowering investors and traders. Prominent investors and professional traders gathered at Grow's Trading Right event on November 9 to share their valuable insights and strategies. Here's a snippet of Arjun Tandon, partner at Kailasa Capital Advisors, sharing his thoughts on the risk of trading with a small capital. Let's listen in.
Let us say anybody who wants to do option selling. तो ऑप्शन सेलिंग में लगभग 1-1.5 लाख लगता है पर लॉट. अब अगर आपको इन सारी चीज़ों का बेनिफिट उठाना है, आप चाहते हो कि मैं थोड़ा डिफरेंट इंडाइसिस में काम कर लूँ, थोड़ा पोजीशन साइज एक्स्ट्रा रख लूँ, तो मुझे लगता है 10 लाख 15 लाख इंडेक्स के लिए आपको चाहिए ऑप्शन सेलिंग. उससे कम में आप जाओगे तो इट इज़ डिफ़िकल्ट टू सस्टेन. सी इम्पॉसिबल कुछ नहीं है, हर चीज़ प्रोबेबिलिटीज़ की गेम होती है. प्रोबेबिलिटीज़ आपके अगेंस्ट होती जाएंगी जितनी छोटी कैपिटल के साथ आप मार्केट में आ रहे हो. अगर आप सेम ऑप्शन सेलिंग स्टॉक्स में करना चाहते हो तो नेचुरली आपको डिफरेंट स्टॉक्स में पोजीशंस बनानी पड़ेंगी. कल को किसी भी स्टॉक में कुछ भी न्यूज़ आ जाती है तो वो आपके अगेंस्ट जाएगा. तो स्टॉक्स में अगर आपको पोजीशन बनानी है तो आई फील 20 लाख के आसपास आपको चाहिए सो दैट आप एक डिफरेंट नंबर ऑफ स्क्रिप्ट्स में आप ट्रेडिंग कर पाओ.
Back with us here on Midcap Radar. The Nifty is moving to the lows, but before we get to that, the capital goods space is seeing some very deep cuts as we speak. Look at Siemens now down 10% from the highs of the day. Cummins India 2 is off the day's high very significantly, and ABB India 2 is trading with losses of over 4% as we speak. But what has caused this very sharp fall in shares of these capital goods companies, particularly in Siemens, and what triggered this fall? Vamakshi is joining in with more details on that. Vamakshi.
Well, yes, Hormaz, the stock has tanked in trade after commentary that came through from the management in its con call. The company's management said that government spending in infrastructure continued, but at a slower pace in the first half of the year. Now, keep in mind that this was largely expected, mainly on account of the elections, but the management sounded positive. They're saying they're expecting an uptick in the second half. Now, the other part is the, of private capex. Now, private capex, they said, was good in semiconductors, batteries, EV, but was quite slow in traditional technologies, and overall they said that private capex has not picked up meaningfully. So this was a bit of a negative. Apart from that, the stock is mainly down because of the comments that they made on the HVDC side of the business. So what they said is that energy business was seeing very strong demand, and they were quite hopeful that HVDC would be a major growth driver going ahead. But the catch is that the company said that they are not present in LCC technology, that is the line commuted converter technology, in India or anywhere globally. They believe strongly in the VSC, that is the voltage source converter technology, because it is superior, and most of the current projects that are being bid out are using LCC and not VSC. Right now, the numbers on VSC are not very material, is what the company has pointed out, and they did say that they will participate in these tenders when they arise. So this commentary that came through from the management was a key negative for Siemens today. But apart from that, they also mentioned that in the digital industries business, they were facing headwinds mainly on account of the semiconductor shortage and some level of destocking that was led by customers. They also highlighted that the margins out here fell on account of pricing pressure as well as unfavorable product mix, but they're expecting this to recover over the next couple of quarters. So given that commentary that came through from the management, it is definitely impacting Siemens, but it is also having a rub-off effect on some of the other capital good names.
Thank you so much for that, Vamakshi. Very, very important commentary coming in as far as Siemens is concerned in the conference call, and the back of that stock is seeing quite a bit of a sell-off, taking down quite a few capital good companies along with it. But the other stock on the radar, which is actually bucking the trend, is MTR Tech. It's buzzing on the back of a recent order win. Upasna joins us with more details.
Well, certainly this stock remains in focus on back of the order when the company's received orders worth 226 crores in clean energy and aerospace segment, out of which 191 crores is the orders received from Bloom Energy, which is company's key significant client in the clean energy sector. Now, 35 crore remaining order is from various clients of the company, that is Rafael, IMI Systems and IAI in the aerospace segment. Now, company has indicated that orders worth 225 crores are expected to be executed within 1 year, and the balance would be executed by April 2026. Now, this order value reflects company's increasing market share in both the segments, namely aerospace and clean energy sectors. Now, recently, Motilal Oswal has given a buy rating on the stock with a target price of 2,100 per share. It says that the company derives majority of its revenue from clean energy segment and one of its most significant client, that is Bloom Energy, as highlighted earlier. Now, as the transactionary impact of Bloom Energy's product changes is over now, brokerage expects MTR Tech to report strong growth in the near term in this segment, and this growth will be mainly led by revival of orders from Bloom Energy and even additional orders received from the new client in the company's product portfolio. Now, it is also highlighted that the Bloom Energy is witnessing a surge in demand as it has signed a large deal with American Electrical Power to install 1 gigawatt of power over the next couple of years, which gives a sizable revenue potential of 900 to 1100 crore to MTR Tech on back of this. Hence, the brokerage is bullish on this stock, and the stock remains in focus today, seeing surging high in trade today.
Interesting, right? Upasna, thanks a lot for that. In MTR Tech, an underperforming stock until yesterday, a 30% down from its peak, and then Motilal Oswal comes out with a note, keeps the faith, says we are buying the stock, 2100 rupee price target. The stock goes up 4% yesterday, wins an order today, another 6% today as well. So some recovery seen from the lows there in MTR Tech. But as we slip into a short break, here is some good news for our viewers. India's business news leader is now just a click away. Introducing CNBC-TV18's all-new app, which Vivek was just looking at on his phone. You can get instant access to breaking news, in-depth articles and financial world updates at your fingertips. You can download that app now from the Apple Store or the Google Play Store. Welcome back, and the Nifty is now heading towards 23,700 on the downside as we speak, fighting to hold that level, 250 points lower on the index now, and most of that fall has come in the last half an hour, 1 hour or 45 minutes of the trading session. It's the Sensex expiry today, but the Nifty is also facing selling pressure. It was already down 3.5% before the today's trading session and another percent down today as well. What is not doing well though, IndusInd Bank is now down to a 52-week low at the lowest point of the day, almost 3% down there as well as we speak. IT stocks continue to extend their losses. Emphasis, LTI Mindtree is now down 6%. When we highlighted it earlier in the show, the stock was down around about 5%. The IT index is down 2.5%. LTI Mindtree is now down 6%. L&T Technology Services is down 4.5%. Emphasis down 4.5%. Persistent down 4.5%. Most of these mid-cap IT names are facing a lot of selling pressure. LTTS, L&T Technology Services, is the stock that I was referring to. But L&T too, of course, is down to the lowest point of the day. But 2024 has been a weak year for the global steel industry, which is impacted majorly by the Chinese steel exports. So can steel find its sheen in 2025 and stage a recovery? Nigel is here with a recap of 2024 and what is in store for the sector in 2025.
Well, the problem of 2024 for the global steel industry has been that Chinese steel demand has been weak, which has resulted in higher Chinese steel exports. Well, let's explain this to you in further detail. India's steel demand has been rising at 10% over the last 4 years. But in the same period, Chinese steel demand is down by 13%. Now, India is the second largest steel producer and will remain an important growth driver in the world. The issue is China has slowed down, which has resulted in Chinese prices slipping to COVID lows, which in turn has pressurized global steel prices. The Chinese housing market has remained weak, with prices of newly built commercial and residential buildings slipping all the way since mid-2023. This has impacted steel demand, thereby leading to rising iron ore inventory at Chinese ports, which is currently way higher than the average inventory levels. The pain point is that Chinese monthly exports have been rising because domestic demand out there has faltered. And for the first time since 2016, Chinese steel exports will clock more than 100 million tons. It's also on course to challenge the previous all-time highs. Well, the Indian steel industry, they are up in arms. Mr. Sajjan Jindal has made a solid pitch. He wants some protection for the domestic ferrous industry because Chinese steelmakers, they have an unfair advantage and part of their exports are trickling into India. Well, the Steel Ministry has recently proposed to the Finance Ministry to impose 25% safeguard duty on steel imports, as India has now turned a net importer from being a net exporter in the previous year. Well, Nuvama has said the imposition of some safeguard duty along with the onset of a seasonally good quarter could give the steel producers some elbow room to go ahead and increase prices by around 2,000 rupees per ton, as domestic prices are at a bit of a discount in comparison to the landed cost of imports. But they also highlight that factors like anti-dumping investigation in Europe and aggressive exports by China is eating into India's exports, which is more concerning than the elevated imports that we're seeing. We'll have to stay tuned to see the government's action with regard to these rising imports, but things could get better for the domestic steel industry from here on, because Chinese steel prices could have bottomed out. Their exports as well could slow down. Additionally, domestic steel makers, well, they've chalked out their capacity addition plans with focus on value addition and cost efficiencies, which could support volume growth and probable expansion of unit profitability. Well, the steel industry hopes to get its sheen back in 2025.
Well, a very interesting piece there from Nigel, hoping for a much better 2025 as far as the metal space is concerned. But with that, it's all the time we have on this edition of Midcap Radar, a day where the screen was completely red. Your stocks when we return.